NATO has now formally invited Finland and Sweden to join its alliance. Meanwhile, members of the G7 have agreed to try and further tighten the vice on Russia's economy to punish President Putin over his invasion of Ukraine. They're banning Russian gold, the country's second most valuable export after energy, and they've agreed to explore the possibility of imposing price caps on Russian oil. But what impact could these sanctions really have? What are the long-term unintended consequences? And what does all of this mean for your portfolio? Well, my next guest says these sanctions are likely to backfire on the US. Michael Wilkerson is an emerging markets investor and the founder of Stormwall.com. He's a contributor to Barron's, The Hill, Jackson Hole Economics, Newsday, and MarketWatch, amongst others. He has over 3 decades of experience as an investor, financial advisor, and executive, including as the CEO of Helios Fairfax Partners and managing director at Lazard. He's currently the chairman of Charity Water, one of the world's largest NGOs focused on solving the international water crisis. And Michael is also the author of several books, including the soon-to-be-released Why America Matters: The Case for a New Exceptionalism. Michael, very good to have you join us here on Kitco. Welcome.
Thank you, Michelle. Great to be here with you today.
All right. Well, Michael, before we get into the bigger picture of sanctions here, I want to start off with the gold ban. And President Biden recently tweeting that the US has imposed unprecedented costs on Putin to deny him the revenue he needs to fund his war against Ukraine, and that the G7 will announce that we will ban the import of Russian gold, a major export that rakes in tens of billions of dollars for Russia. We had the British Prime Minister Boris Johnson echoing that sentiment, saying that this ban will hit Putin hard, that the measures will directly hit Russian oligarchs and, quote, strike at the heart of Putin's war machine. Now, this gold import ban will apply to just newly minted or refined gold, at least according to Downing Street. So big picture, what impact do you think this gold ban is going to have on Russia's economy when and if it does in fact go into effect?
Almost none, very little. I think this is a largely symbolic gesture, consistent with a lot of the other gestures that have been made around trying to isolate the Putin regime and what's happened in Ukraine, which of course is horrible. When you look at gold specifically, Russia is the world's second largest producer. Exports do matter. It's about a $15-17 billion annual revenue item for Russia. A lot of that goes to the G7, Britain in particular. The announcement really comes months after the substance of this has already been in effect. So back in March, the London Bullion Dealers Association basically said that they were going to, they had deregistered, decommissioned, whatever the right word is, decertified Russian refineries, effectively taking it offline. President Biden himself in mid-April came out with an executive order prohibiting U.S. persons, U.S. entities from transacting in Russian gold. So in effect, these items have been in place for a while. Just like with oil, the West does not want to hold or trade in hard physical assets of Russia that they get stuck with at the end of the day. Compared with oil and gas, while it is their third largest or one of their largest export items, I don't think it's that consequential. Just like with oil and gas, and we'll probably talk about that a bit more, I imagine that Russia will find another home for it. I think
right.
If I may add one thing, it's important to note that since around 2018, both Russia and China have been substantially increasing their domestic gold reserves for their central bank. Russia has officially said that they're going to source a lot of that increase from domestic production. So at least over the short term, I have a feeling that Russia will be quite content to stash that gold away in its own central bank. They did announce a couple months ago, that they intended to work on a plan to back the ruble by gold and other commodities. So between domestic use for the central bank and increasing their reserves and then finding other markets, whether it's China, India, or otherwise, I have a feeling that Russia is going to find a way to navigate around this new type of sanction.
Right, lots of points that you made there, but ultimately a symbolic gesture. Russia's going to keep its gold anyway, as it has been, and that's probably why we didn't really see the gold price move on this news.
I think that's right. Now, why the gold price hasn't moved, I think, is a much bigger question and a conundrum. I know your viewers are quite expert on this and have thought a lot about it. It didn't move. Now, keep in mind that Russia represents a relatively small portion of the global export market for gold, somewhere between 3 and 5%, depending on who you look to. But I've been pretty bullish on gold for the last 2 years in this difficult environment. I've been shocked at how little it's moved on any news. That's a broader conversation. I know you've talked about it with some of your other guests,
Right.
but I guess in retrospect, given that history over the past 24 months, in some ways, I'm not terribly surprised, given the lack of real substance here to what this was really about, and then a much bigger and broader issues going on in the gold market around the world.
Right. As you say, a lot of factors impacting the price of gold. The strong US dollar, certainly one of them. Let's talk about this oil cap, because the G7 is also trying to get some consensus there. And the idea is for G7 countries to say to Russia, we'll buy your oil, but we will determine the price, because they still want to allow Russia to earn enough to continue exporting, but to not cause any more supply issues. So it's not giving Russia enough money to fund its war, but not disincentivizing Russia from selling to them entirely because they need the supply. So now these price cap proposals, Michael, they're ranging from a few dollars above the so-called break-even price, which is about $42 a barrel, to using an average of last year's global oil price of around $70 per barrel for price cap. Now, assuming that the G7 actually agrees to this and comes up with a price ceiling, do you think that this is actually going to work?
I'm about ready to jump out of my chair on this one. This one, when I first saw it, made me laugh out loud. I really tried to understand it in good faith and give the G7 leaders some credit here. I couldn't do it. I can't find any other thought than this is some form of magical thinking. Oil trades in a market. It's a global market. It involves producers, consumers, actions all over the world. So let's think about it this way. First, the West says, nope, we are not going to buy your oil. There you are. You're stuck. You're going to have to ease off and back away from Ukraine, do whatever their ultimate objectives are. But then later say, no, wait, we've got a better idea. We'll allow you to sell there, but you got to give it to us at a really good price. That sounds like a great deal. There was a lot of talk from the leaders after the G7 leaders after the meeting saying, well, this is very complicated. We've got to go away and think about it. We've got to have some conversations. It'd be great if the producing countries would agree to this. I said magical thinking because this is something where in a free market, obviously there are a lot of factors. In a big global market like oil. I was confounding gold and oil there. Maybe there's a reason. Oil trading today somewhere between $110, $120 a barrel. I heard, as you said initially, they were talking about, well, what if we said 75, 80, other numbers? You cannot force Russia or anybody else to sell at any price in this market. If you look at what's happened since the oil and sanctions were put in place, effectively, while Russia did have some dip in March, April, production is coming back. I think they're pretty close to 12 million barrels. Excuse me, that's high enough to the 10 million barrel number. And they are exporting. They're not exporting to the West. They're not exporting to the G7. They're exporting to China. Right. They're exporting to Russia. They're exporting, to India. Yeah. And other parts around the world. Gold's a little bit of a different dynamic because of the potential for domestic consumption. They seem to be finding a market. There is no way that, again, in a global market, that the G7 leaders, the US, President Biden, can force a particular price. We saw on the producer side, OPEC was able to do that for a time in the 70s, given the cartels. OPEC is a cartel that was put in place. What G7 is proposing is a buyer's cartel. But again, to the extent that Russia has alternatives, which they do, I think they will be very ineffective. And this one, you can debate the merits of some of the other things. This one caught me a bit off guard, and it illustrated to me, unfortunately, that I think our leaders of the West are somewhat disconnected from market dynamics, market realities that are bigger than any single nation and even bigger than the collection of leaders that represented the G7.
Yeah, it's all very well saying we want to buy oil at a price that we determine, but if there are other buyers involved and they don't like that price and the seller doesn't want to cooperate, well, then it doesn't really count for much. As you say, a buyer's cartel is one thing, a seller's cartel is another. And you mentioned OPEC. And OPEC, in fact, obviously came up during the recent G7 meeting. We had French President Macron. He was caught on camera accidentally telling Biden that he's been told by two OPEC oil producers, Saudi Arabia and the United Arab Emirates, that they can barely increase oil production. So trying to ask them to do so isn't going to really yield much of a result. And we know that Biden is scheduled to visit Saudi Arabia in July to ask for an increase in oil production. And this is, of course, after he was very critical of the Crown Prince Mohammed bin Salman, calling him a pariah. And now he'll be begging the Saudis to increase productions. And, you know, Michael, one of Biden's first moves in office was canceling the Keystone XL pipeline, banning new oil and gas leasing on public lands, stopping the sale of several drilling areas in Alaska and the Gulf of Mexico. And because of that, the Republicans say that Biden has put the U.S. in this position. The Biden administration, the Republicans are saying that Biden has effectively waged war on domestic energy production. Do you agree with that?
I do agree. They're not wrong. If you look back at what's happened over the last few years, you know, for the first time, America achieved energy independence under the Trump administration. Fracking was booming. The industry, gas was at $1 something a gallon. I think gas prices have tripled in the last year or two. And if you look at the cumulative effect, Keystone XL is the marquee example, but there are many, many others. You mentioned leases on federal land. I think even more pernicious is the vast swamp of regulatory barriers that keep the domestic oil and gas industry from actually functioning. The red tape, the bureaucracy, the difficulty of actually making progress. It's hard to point a finger in a bog, in a swampy bog, and say, well, it was that stump that did it, or it's that branch that tripped me up. But along the way, it wears you out. It makes it almost impossible to get anything done. You know, there's been almost no new refining capacity come on in this country since the 1970s. The CEO of Chevron pointed that out a couple of weeks ago. It's all been on the margin. The vast trajectory here has been to impede and limit U.S. energy production with a somewhat, again, magical thinking, a fantastical idea that we can switch overnight to a green economy. Now, I'm all for renewable energy. We've invested in renewable energy. They're great ideas, but they are ideas at the moment. And there is no administration that is powerful enough to make the sun shine at night or the wind blow based on executive order. It's just not possible. We have to have our oil and gas industries functioning and healthy for our economy and for our national security as well. And I do believe that you're right, and the criticisms are correct, that the steps, whether individually or in the aggregate, are undermining our core strength as a nation, our core strength as an economy. And it's sad. It's sad for me. Well,
yeah, the Biden administration has made it very clear that they intend to decarbonize, setting their so-called clean energy goals, which many are saying are, well, a tad unattainable, lofty, or magical, as you would like to say. And we're seeing a similar phenomenon in Europe. But addressing this criticism from Republicans, President Biden made a recent speech trying to rebut it. So I want to play this clip and then get your response on the other side.
I know my Republican friends claim we're not producing enough oil, and I'm limiting oil production. Quite frankly, that's nonsense. Here's the truth. Just this month, America produced 12 million barrels of oil per day. That's the highest, that's higher than average under my predecessor. And we're on track to set a new record for production next year. Plus, I've added to that supply of oil by releasing a record 1 million barrels of oil per day from what's called the Strategic Petroleum Reserve. In fact, I just led the world to coordinate the largest release of global oil reserves in history, including from other countries. In total, that's 240 million barrels to boost global supply. And Republicans falsely claim that I'm blocking production on federal lands. But again, that's nonsense. Industry has more approved permits for production on federal lands than they can possibly use. That's a fact.
All right, we want to be fair here on Kitco. So, Michael, what do you say to that?
Well, I wrote recently about the Strategic Petroleum Reserve, and I called the actions of the executive administration a folly. And I believe it is a folly. You know, the Strategic Petroleum Reserve was put in place following the Arab embargoes, following the inflation of the 1970s, when the U.S. came to realize we're dependent on foreign oil, we're dependent on foreign powers that may not always have our interests at heart. The result of that was to create the Strategic Petroleum Reserve. Its purpose was to provide a buffer to an anticipation of the potential of a substantial, significant supply disruption that would greatly impact the U.S. economy. It was never intended as a means of price control. It was never intended as a political tool to, by easing the pain at the pump, to help one political party over another. Never in the history of the Strategic Petroleum Reserve has there been more than 30 million barrels released in any given year. In the mid-1990s, President Clinton authorized a release for certain amounts. His own Treasury Secretary, Larry Summers, came out and made this point that this is not something that should be used for political purposes. It's something that should be used for the nation's national interest. President Biden has said that he will release 180 million barrels of oil. He had already released a significant portion, it's 30 or 50, I forget which, in November of last year. The net effect of all that, if he follows through on it, it's very clear he intends to, is going to be to reduce the Strategic Petroleum Reserve to basically half capacity, to a point that would require an additional level of clearance under the authorization to go any further than that. But it's extremely dangerous. So basically what we're doing is draining our reserve, the national reserve, in advance of any real emergency. Now, gasoline prices, it's a problem, and we're all feeling it, we're all suffering from it. I'm not a fan of high gas prices, but I would argue that the reserve is a strategic asset, not an economic asset. We are using something that we may need in the future shortly in a real emergency. And the irony of it is it actually isn't helping prices at the pump. It actually isn't helping supplies. If you look at supplies in the U.S., that oil supplies are actually going down. I saw today that Cushing is just reportedly above its operational level and will have to replenish. But the irony will be that if a year from now we have to replenish the Strategic Petroleum Reserve at a higher price than what we were able to realize from it today, after it was filled under President Trump at one of the lowest levels in time. So during the preceding few years, the reserve was topped up, it was maintained at a high level. And again, in an era where oil was quite low, retail gas prices were below $2. Here we are now draining it, and we're going to have to fill it when gas may be as high as $10. Lunacy.
All right, so you're saying that this is actually putting the U.S. in a potentially more precarious position for the future if we're tapping a reserve when we don't really need to be tapping into it just yet. I get that point, and it is perhaps a dangerous move. But on the bigger picture, where he says that Republicans are falsely claiming that the administration has been blocking production, is that valid?
It's not. It's not valid. You go back to day one executive order to kill Keystone XL. Okay, that again was one of the most egregious things that put a dagger in the heart of the American energy industry. I made the point that you can point to any particular federal leasing, oh, we're still allowing it. It is the bureaucracy, the regulatory red tape. It is clear there is no one in the administration who is interested in motivating domestic production. You see it, as you mentioned, the trip to the Middle East, overtures made to Venezuela, overtures made to other places, including potentially Iran. It appears that the administration is prepared to do almost anything to lower gas prices, except the simple thing that lies right in front of them, which is to allow American entrepreneurs, American companies to do what they were made to do, which is to support this economy and to help keep America safe and free and its economy running and people with jobs. This is the other sad portion of this is these actions are killing jobs in America.
Right. And of course, we've had this narrative for the last decade or so, which has been very anti-carbon, very anti-fossil fuels. And that's, of course, also led to investment lacking in these sectors. So it has created a slowdown of the industry at large. And now we need them to, get back pumping. And it just doesn't happen overnight like that.
It doesn't happen overnight. The issue is actually much worse because there are, in the US, in Europe, a lot of these financial institutions are now restricted by CSR policies from actually investing in these traditional industries, whether it be oil and gas, coal, or otherwise. They can't do it because they're afraid of the woke mob showing up at their shareholder meetings and terrorizing them. These projects are incredibly expensive, incredibly complex. They run over multiple years, lots of regulatory red tape, very complicated. And the risk that is required, imagine if you were a project financier in Keystone XL, whether a debt provider or the developer itself, the equity below the debt. Do you think that even if Biden undid the executive order, that it's going to be easy to restart that project? There's so much risk involved and so much uncertainty that even if you said, yes, the project is back on today, a financier is always going to weigh the risk of what if the regulatory environment changes again tomorrow?
Right. Yeah.
So I think it is incredibly difficult because we've now created an environment where our most important industry, our biggest projects, can't get the financing that they need on any kind of reasonable terms. And this I think is one of the underlying issues here is that even if we get a shift in the political environment, the financiers, the banks, the non-bank lenders, and the developers are really going to struggle to make a convincing case about the risk-adjusted reward.
Right. Well, the ESG narrative, of course, has permeated the industry in the US and in Europe and elsewhere in the world. But I want to go back to the big picture here, because the sanctions against Russia, we've already seen them hurt American energy interests and hurt Americans' pocketbooks. But you're saying that they're going to hurt American and Western interests in several ways by putting food and energy security at risk and by undermining the US-dominated global financial system. I want to break those points down, but before we get there, you also make the broader point that sanctions rarely achieve the desired aims anyway. So expand on that for us.
So sanctions are often articulated as a means to break the will, of the counterparty, to bring them back into the fold of the allies. They're couched in economic terms. The reality, and you can look at over a long history of sanctions imposed in the 20th century or even before, going back in history, they rarely work as an economic matter. They often backfire. They're clearly a political tool that says, all right, well, we're not prepared to engage in a war, in a hot war at least. What can we do to signal to the enemy, to ourselves, to our people that we're not going to stand for this? We're not going to trade with the enemy, certainly. What can we do? The problem is, and I think it's specific now to Russia, is that they've been thinking about this for a very long time. We can get into this to the extent you'd like. That they have, in my view, been working since 2014, the Crimean invasion, and sanctions were imposed by the West at that time. Russia has worked for the last almost decade to sanction-proof its economy. The simple point I would make is that sanctions rarely work because of the impact tends to be borne by the sanction-imposing country. We see it in energy prices. We're likely going to see it in food shortages and rationing going forward in the summer, which will be a terrible and unnecessary event. I think the thing that we have to remember, and it's not being said to the public, to the American public or the European public, is that sanctions are a form of war. They are. Blockades, embargoes, sanctions, short of a hot war, they are a wartime activity. And I don't believe the American people have voted for that or support it. Most Americans didn't want us to go into, to engage in a war over Ukraine, but we've done so. And so I think we have to remember that context, that certainly from Moscow's perspective, they see this as an act of war, along with everything else. I don't want to get ahead of the conversation, but I think that's an important point to make.
All right. So if sanctions are an act of war, and certainly Putin has described it as an act of economic warfare against his country, and you say that they ultimately don't work, what can be done then? Why are they being implemented, and what can be done? I mean, are you advocating for a kinetic war? Are you advocating for cyber war? Are you advocating for no approach at all?
Actually, not advocating for anything. I think we have to ask what our goals are, and the goals are unclear. At a minimum, our leaders have publicly said that the goal is to get Russia out of Ukraine, but they've also now increasingly said our objective is to remove Putin from power, to destabilize the regime and get him out. It's interesting that there has been limited willingness to engage with Russia in any kind of negotiation, either before the invasion or now, which would be a step that perhaps would leave Putin in power, two, Russia controlling some portion of Ukraine. We seem to be, as the days and weeks and months go by, doubling down on an all or nothing campaign. We're increasing the lethality of the types of weapons and provision supplies that are being provided to Ukraine. We're now sending troops, American troops, to Europe to support NATO. From what? I'm not sure. Do we expect that Russia is now going to invade Germany as well? I don't think those things are going to happen. But my concern here is that we seem to be doubling down on an effort to completely take out the Putin regime, undermine Russia as a nation altogether. Any cornered rat will fight to the death. And by pushing Putin and the government into a corner with no diplomatic off-ramps, no chance to negotiate a solution, I think we're making a mistake, that we are at an eerie parallel to 1914, sleepwalking into disaster, to quote, I think, the name of the book, that we are increasing the risk to the West of a real, even if it's an accident, increasing the risk to the West, increasing the risk of an energy crisis in Germany and much of Western Europe. It gets about half of its natural gas from Russia. Russia already shut off a portion of the supply earlier in June. It's probably not in their economic interest to go all the way on that, but in their strategic interest, if they're backed in their corner, they could, and that would be devastating for Germany. So I'm not advocating for a particular solution. What I am saying is, let's be very clear about what we're doing and why, and that its consequences are rebounding on the U.S. and on Europe. I am very concerned that we're on a path from which we may not be able to return. The insistence that we get an all or nothing outcome here, I think is not going to work.
So you don't see a diplomatic off-ramp being offered to Putin?
I'm not involved in those conversations. There may be some that exist. The opportunity to reach an agreement with Russia, with Putin, was before February, before there were boots on the ground. Now, any negotiations are going to be done at the point of bayonet.
Right.
And it's a terrible position for the West to be in. So they're looking at all these other things. What else can we do? What else can we do to squeeze it? We've seen recently, in the last couple of days, that NATO has agreed, thanks to Turkey's changing of their minds, to allow Finland and Sweden to accede to NATO. There is a strong argument that says the entire reason that Russia actually invaded Ukraine was because of this push by the West to bring Ukraine on Russia's borders into the EU, into NATO. And now we're again doubling down on that by bringing in two other countries very proximate and very much in Russia's strategic sphere, which is only going to intensify the issue, the original motivation behind the resistance. I think what we could have done, and what John Mearsheimer pointed out almost 10 years ago now, was to abandon that strategy and to allow a buffer zone to exist where Ukraine was neither tea nor coffee, somewhere in between, and a neutral non-threat. I think that's the only way that Ukraine was going to be able to stay independent, and that independence is very unclear today.
Right, and if those diplomatic concessions regarding Ukraine's neutrality are offered at this point, you have tens of thousands of lives that have effectively been lost for nothing. As you say, maybe the time for some kind of outreach was when Putin was amassing troops on the border back in February. But that's hindsight, I guess, even for perhaps the Biden administration.
But a real tragedy. You're right. It's the human tragedy here is incomprehensible.
Yeah. So at the risk of putting you on the spot, how do you see this playing out then?
Badly. I think I would love to be wrong on this, but I am concerned that this escalation, this escalation in terms of commitment, escalation in terms of armaments, taking actions that are clearly provocative and poking the bear, so to speak, in terms of NATO, Sweden and Finland, continuing to impose new rounds of sanctions. Interestingly, for the last several years, you mentioned weaponizing the dollar. The U.S. and the West, with the U.S.'s pressure, has been using SWIFT, the interbank payment messaging system, as another tool in the arsenal, in the sanctions arsenal. Now, the majority of financial flows around the world are made in U.S. dollars. The majority of them are done through SWIFT. In 2014, again after the Crimean War, Russia, China, India, and others saw what the U.S. had been doing, increasingly using SWIFT, which should be a neutral pipeline, right, to allow one party to communicate with another, no loyalties at all, but turning SWIFT into a tool of war. The problem with that has been that China, Russia have been working pretty diligently over the past decade to create their own alternative payment systems, messaging systems. They've had some success, certainly not going to replace SWIFT today, but we're creating these significant motivations for China, for Russia to realign away from the US, away from Western financial institutions. I am answering your question, believe it or not. I'm saying, how is it going to end? I think what we are doing, however the war itself specifically ends, which doesn't look great for Ukraine at the moment, but this is something we'll watch. The bigger picture here is it's going to end badly because the collection of all of these actions, these sanctions, using the financial tools as, again, instruments of war, these are not going to endear Russia to us. They're not going to endear China to us. They're not going to make them feel, wow, I really miss being part of the Western family. I want to come home.
Right.
Rather, they are pushing them into a strange bedfellow of an alliance, pushing them further and further away from the U.S. and thus from U.S. influence and from the influence of the dollar. It's not going to happen overnight. It's clearly happening. That is detrimental to U.S. interests. It is detrimental to the dollar. The dollar remains strong for the moment for all sorts of reasons, but it's a long-term negative.
Yeah, and that point has actually been made by a number of guests on this show, saying that weaponizing the dollar is ultimately going to damage its status as the sole global reserve currency, that this is really going to backfire in a very bad way on the US. Now, we speak about the dollar, but with all of these sanctions, we see that the ruble has been one of the top performing currencies this year. The ruble rallied this week to its strongest level in more than 7 years. And this has partly been because of Russia's announcement that it would back the ruble with gold and other commodities. And in one of your recent works you wrote, and I'm quoting you here, that in addition to his role as pillager of Ukraine, Putin may well be destined to kill the current global fiat monetary system. Explain what you mean by that. Explain what this whole move means for the concept of fiat currency, which is backed by the full faith and credit of its issuing governments.
Sure. So, this is a much longer and complicated conversation, but essentially in the 20th century, under Keynesian economics, the West was increasingly convinced that it needed to move off the gold standards to become a fiat currency that was based solely on the good faith and credit of its governments. That worked for a long time, but it also enabled those governments to increasingly run deficits, increase their debt. And the system works as long as it works, which is as long as everyone believes in the system itself. What destroys it is excessive government debt and the inflation that accompanies it. And just for a bit of explanation, so what Russia have done is they have announced the intention. It's a plan. It's not effective yet. They may not be able to pull it off. But if they do, what they are trying to do is to back the ruble by gold and other commodities. So not exactly going back on the gold standard. We talked earlier about how they are accumulating gold reserves, but basically to make the ruble, for the first time of any major currency in a century, actually backed by something real. That is completely opposite of what the G7, of what the Western countries are doing, and it is a threat to them because it actually begins to signal the lack of consensus on what makes money and what makes government issued money. That lone voice of a reasonably large country moving away from this idea that it doesn't matter. We don't have to have gold. We don't have to have any other real hard assets reserve. Trust us, it'll be okay. As we see in the U.S., rising inflation, as we see national debt above 30 trillion, not including personal and corporate, just government debt, roughly $90,000 a person, and a suspicion that perhaps government may be intentionally using inflation to help erode the value of the dollar and the value of the debt that it holds, that it's obligated to Americans and to people around the world. So what I meant was this may be a harbinger of an undermining of that system, of an undermining of the credibility of the Western economies. Now, whether that has anything to do with the strength of the ruble, I have no idea. It was a dollar would buy 75 rubles before the war. When sanctions were first imposed, the ruble fell to 130, 139, I think it was. And as you point out, it's now at a 7 or 8 year high. It's done incredibly well. Russia's running its largest current account surplus, I think, ever, while the U.S. has its largest current account deficit ever. Hard to say what's driving the ruble, whether it is that prospect that maybe there's going to be some there in terms of commodity backing. It could also be that you can't trade the ruble right now, or at least the West can't, so there's not really price discovery going on in it. Russia has insisted that its foreign debt must be paid in rubles. That's caused some consternation. Russia's technically in default right now. It has the funding, the ability to pay its foreign debt obligations, but no Western power can convert its rubles. Yeah. So it'll be interesting to see how this plays out from a legal perspective as to whether Russia's in default or whether the sanctions that have been imposed are the real issue here. But it's a different kind of default than what we saw from Russia in 1918 in the Bolshevik Revolution, or even in the 90s when Russia defaulted it on its domestic debt. But I think the real question here that you're raising, the bigger picture, is the global monetary system and whether the fiat system is cracking, it's certainly under strain. And we'll see how it plays out.
Yeah, we have had a number of very smart people on this show making the argument that we're about to see the bifurcation of the monetary system, and that we could very well see the likes of China and Russia come out with commodity-backed central bank digital currencies, and that the monetary system as we know it may very well be beginning to phase out. So as you say, that's still to be determined, but it does seem as though this could be one of the unintended consequences of the broader sanction movement. I want to talk about some of the more specific impacts that you see these sanctions having on the US economy and the global economy, because you're saying that food and energy prices will continue to rise across the Western world for the foreseeable future. So elaborate what you see happening there.
Yeah, thank you. Now, coincidentally, I happen to be sitting this week in Geneva, Switzerland. And Geneva is the home to a lot of the world's big commodity trading houses, energy and otherwise. I've had some conversations, some discussions, formal and informal. And it's pretty clear that oil traders are seeing an environment, and energy traders are seeing an environment like they have not seen. I think there is concern that things are going to get worse before they get better. We're seeing impact across, I mentioned U.S. inventories are going down despite the release of the SPR. We're seeing gas supplies are increasing, but that's only because consumers are taking a pause on prices at above $5 a gallon. One of the real issues is natural gas. As I mentioned, Europe is highly dependent on Russian natural gas and natural gas for its supply. The spread between EU natural gas and US natural gas is blown up. I think there's a premium of about 100-120% right now between the two. And I think there is significant supply chain constraints coming that have not been worked out of the system. Now, why does that matter for food? So we know that it is going to keep energy prices high as a result of all that. Well, let's take the U.S. as an example. In the U.S., somewhere around 75% of all of the food that we consume, everything we buy from the grocery store, from the supercenter, whatever it is, that food got to our local distribution center by a truck. That truck runs on diesel. That diesel is used for a truck that's often owned by an owner-operator, i.e. by the trucker himself, who's finding it incredibly difficult to make ends meet and run his truck or her truck profitably. So you're seeing increasing price pressure on food, but you're also seeing actual supply chain issues, right? So we've got no formal embargo on Russian grain, but we've got blockades. We've got issues in terms of getting grain out of the Ukraine, Russia, fertilizer. We had the head of the African Union come out about 4 weeks ago and point to this as an issue, point to SWIFT as an issue, and that the African nations are not able to use the SWIFT network to pay Russia for fertilizer, to pay for these products upon which many of the African nations depend. And he was raising a bit of an alarm, saying this is not just about prices. This is a food security issue.
Right.
America may be in a different position. We have an abundance of food stock. We're a big producer of grains, big producer of all kinds of things. But globally, it could be a real issue. And I don't think the U.S. can escape it from rising prices, potentially with the risk of shortages or even rationing, which would be unprecedented, unbelievable. But I don't think one can completely take it out of the view of potential outcomes and risks here.
Yeah, and it's interesting, Michael, that you say African nations are saying we can't use SWIFT to pay Russia, which goes back to your other point that they're just going to come up with another system where they can pay Russia, and that's going to cut the U.S. out of the picture. But another thing that I want to focus on, of course, is the inflation that we're seeing in the U.S. And we know the Fed is trying to bring down inflation by raising rates. We've recently had the Fed's preferred inflation measure coming out at a multi-decade high. Core personal consumption expenditure prices rising 4.7% from a year ago. It was 0.2 percentage points less than the previous month, but still around levels last seen in the 1980s. Mm-hmm. So can the U.S. bring down inflation and maintain sanctions? Could that even happen?
Might be able to do it by maintaining sanctions, but they cannot do it without without a real recession. If you look at what's happened, a couple of things. So just as a background, I started writing about the inflation issue in the middle of 2000. Everyone said, you're crazy. It's not going to happen. We've had 30 years of deflation. Everyone said inflation was going to come after the global financial crisis. There are some big issues at play here around U.S. inflation. And by the way, the U.S. statistics on inflation, we're leading the world. Right now, our inflation is higher than anywhere in Europe. It's higher than the UK. It's very unusual, a very unusual situation. It's been rising for well over a year. I know there's been a lot of talk around, well, this is Putin's inflation. Inflation hit 5% back in August of last year. It hit 7% in December, long before the invasion occurred. The issue here, if you'll allow me, is we have to go all the way back to the global financial crisis. From 2007 until now, the combined forces of quantitative easing and stimulus policies, all of the money that has been pushed into the U.S. economy over 15 years equates to a roughly tripling of the total U.S. dollar money supply M2 basis from 2007 to today. Tripling, okay? Now, prices haven't risen or didn't rise through the crisis initially, and people dismissed inflation as a result and said, oh, well, see, we can increase the money supply. Nothing will happen. This is the whole idea behind modern monetary theory, a complete lunacy of an idea that basically says we can run deficits, the government can run deficits every year, we can increase our national debt. It doesn't matter because we can always issue more. What happens in inflations, and if you look back over the history of 20th century inflations, from the worst of it in the Weimar Republic, but even other inflations in the US, other inflations in Europe and around the world, the rise in prices always lags the rise in money supply, often by several years.
Yeah.
But it never fails to meet it. If you look at all the data, somewhere between 60 and 100% rise in prices to match the rise in in the monetary base. What that means is that all else equal, even without a worsening sort of shock, just running its course, inflation may run somewhere between 8 and 12% over the medium term, 3 to 5 years, in my view, just to catch up. Now, Keynesians disagree with me profoundly on this, but I think I'm right, and I hate to say it.
Yeah, it's not right. It's not a good feeling to be right when you're making those kind of forecasts, but the data does tend to support you, certainly the historical data, and if we project it forward. So, of course, Michael, you have at least 3 decades of experience as an investor as well. And how should investors then be positioning themselves in this potentially stagflationary environment if we've got a recession looming, if not already here, and inflation being very stubborn due to fiscal and monetary policies in the US, and of course, the geopolitical factors and sanctions that we've discussed? What would you advise for an investor to do in terms of portfolio positioning?
Right. Well, the first thing I would say is that 30 years of financial and investing experience is not enough. You need 300 years to really get a picture of what's going on here, because nothing in my lifetime, nothing in your lifetime, provides adequate frame for the moment that we're in right now. You have to look at these long cycles in history. You have to look well beyond it. The last time we had anything similar, analogous to this, was the 1970s. Okay, I was in short pants. It's irrelevant what's happened in the last. We've of course gone through this very long period of easy money, a zero inflation rate policy period, where we've seen asset bubbles in every single asset class. It is an incredibly difficult time to try to think about where should one invest at this point. What do we know? In an inflationary environment, we know that fixed income, that bonds, that sovereign debt will likely perform poorly. In the rising inflationary environment, bonds will do poorly. In highly inflationary environments, equities tend to do okay, although they don't make up for all the loss. They tend to get closer to inflation. The issue, of course, here that's unique about this is this fact that we have been in this long period of zero or low interest rates, where multiples to earnings were so high that we've seen some of the air come out of that particular balloon, especially in growth equities. Multiples have come down. I am concerned. I don't believe that we've hit the bottom. I think there's a long way to go. So I'm incredibly, I'm not in a position to say growth equities feel like a good place to be. We've also seen a bit of a real estate bubble for the same reason. The values of everything having gone up, and with so much money floating around the economy. The only place that I get even somewhat comfortable right now is in commodities, for the combination of all the reasons that we've talked about.
Yeah.
In particular, energy, in particular food and the agricultural complex, I think will likely perform well for bad reasons, for reasons that I wish didn't exist. But from a purely investment standpoint, I think they are areas where one can have some greater degree of confidence. Metals are a conundrum to me. As we started the program talking a little bit about gold in the metals markets. Industrial metals will probably do a bit worse if we do head into a stronger recessionary environment. I'll let one of your other guests tell us where gold is going to go, because I've been wrong for 2 years straight now.
Well, that has been the conundrum for many gold investors and for many gold analysts. But we want to focus back on your area of expertise. And before I get to your next book, I do want to go back to one of the bigger pictures that we touched on slightly, but that is from your previous work. And that is the broad historical precedence of sanctions actually not even working. Because you've written extensively, citing several examples, how sanctions are not just with the case of Russia, but sanctions implemented by the US and other countries against other, shall we say, nefarious actors have failed. So expand on that for us.
It's easier to find examples of sanctions and embargoes that didn't work than of those that did. So we can go back to the big events of the last century, focused around World War II. The U.S. embargoed weapons and petrochemicals from the Nazi regime in the 1930s. What was the effect of that? Well, basically, the Nazi regime began to look to domestic sources, began to develop alternatives to traditional cracking of petroleum, and are actually successful in developing their own industrial base. But perversely, cutting off in the 1930s, before the war, the regime from a lot of the access to a lot of those products, petroleum and otherwise, created great incentive against the advice of his generals who knew what they were doing militarily. But it gave Hitler a lot of motivation to start to look eastward, to look towards Ukraine, the same areas that we're talking about now, to capture the oil fields, to capture the agricultural riches of the black soil of the Ukraine. So in a weird way, sanctions didn't work. I'm not saying we should have done the things, a strong resistance against Hitler. I'm just pointing out the facts. They didn't work. We put in sanctions against the Stalinist regime, put in sanctions against the post-war USSR, Soviet Union during the Cold War. You can only call that a success if your time span is 50 years, 100 years. Over any shorter time frame, it doesn't work. We have had sanctions imposed against Iran since the Iranian hostage crisis, almost 40 years, varying degrees, sometimes less, sometimes more, sometimes we've had rapprochement, we've tried to be on friendlier terms, worse terms, strong sanctions under the Trump administration here, oil sanction otherwise. What has happened? Well, it has been effective in devastating the Iranian economy. It has hurt the ordinary man, woman, family on the street. Has it undermined the regime? Absolutely not. It's only made the regime stronger, more extreme, I should say. Maybe it's not stronger, I'm not sure. Certainly more extreme. And the worst part of it is it's moved the moderates within the country towards the extremes to say, yes, America is the great Satan. Look at what they're doing to keep our country down. And we inadvertently are creating a situation where we're motivating terrible regimes like the Iranian, like the Putin regime, to carry on, to fight harder, to defend their rights, to protect their people, to wage proxy wars against, in Iran's case, against Israel and otherwise. I am not at all advocating supporting these regimes. I am saying we have to really think about the underlying consequences of these actions, and are they carrying out their desired effect? And my main point is they don't work. Those are three examples, three big ones: Iran, Nazi Germany, and the Soviet Union. There are many others. We give smaller examples. Even look at Venezuela recently, Cuba. Just like Iran, the economies are devastated. The people are impoverished. The same corrupt leaders continue their corrupt leadership, and the regime never changes. So what are we doing? What are we really trying to accomplish? I am sure that it's not in the hearts of the American leaders, the Western leaders, to devastate the populations of these countries, but that's what we're doing. We are hurting ordinary men and women, and we're not really impacting the regimes, the leadership, in the way that we think.
Well, Michael, you could argue that when you harm the population to such an extent, as devastating as it is, it foments anti-regime sentiment, and that may result in an overthrow of the regime.
It is the hope.
It is the hope. It is what we hope will happen, not always the intention. And to your point, in fact, there's been a lot of research on this, including in the book Economic Sanctions Reconsidered. And that actually looked at 170 cases of economic sanctions since World War I. And it found that only 13 cases of sanctions, in fact, worked as intended. And according to that study, one of the most recent cases of effective sanctions involving the US was back in 1993. And that was the US versus Guatemala. In 1993, after President Serrano dissolved Congress and said he would rule by decree, the US and European nations threatened sanctions, and then business owners, scared of the economic impact, helped force Serrano out of power and installed a new president. So the economic conditions led to discontent of the people and the regime change. But as you say, the success of sanctions in effecting real change is very dubious, very questionable. And in the interim, back to the sanctions against Russia, while they may not yield the results that they hope that they will yield, in the meantime, it is putting the US in a more precarious position with regards to energy security, with regards to food security, security of the global monetary system, and security of the dollar as the global reserve currency. And of course, America's standing on the world stage is also being impacted here, which brings me back to the future of America and brings me back finally to your upcoming book, Why America Matters, the Case for New Exceptionalism. And in the book, you say that America is neither declining nor dying, but in a winter season. So finally, give us a taste of what we can expect from your new book.
Well, thank you. This has been a labor of love, but it's been a big labor. Coming out in October. And I try to answer the basic question of who are we, where are we going, and why are we so divided? And I look at a bit of our current situation, some of the very same challenges that we're facing right now, the crisis of circumstances, whether it be the pandemic, inflation, rising China challenge, one. Number two, crisis of identity. Americans, we don't really know who we are anymore, and it's especially true for younger generations, and that's a problem if you don't know who you are as a nation. Number three, crisis of institutions. We no longer trust them because they no longer trust us, and they're acting as such. And then number four, crisis of engagement. That the combination of all those things means we don't really know how to engage with the world on from a foreign policy perspective. And so I use this opportunity to do a little bit of a refresh on why America matters historically. I think that America's had a unique role in the world. There's a lot of criticism of American exceptionalism because of the arrogance that occasionally came along with it, because of periods of when that exceptionalism was expressed more as an imperialism. It's actually not the heart of American values. The founding fathers were very much opposed to adventures abroad in search of monsters to destroy, as John Quincy Adams said long ago. But the idea here is that America still matters in the world. The world needs America. Why? The world needs a shining light of democracy, needs a strong economy. We are entering a new geopolitical phase of conflict, of global conflict, different than the Cold War, but a rising China who is formally and officially confirmed their ambitions around the world, and they do see America as an adversary and as the leading barrier or the main barrier to them achieving their global functions. It has never been more important that America recognize who it is, get back to some of those core values. But one of the main points I make is that we can't go back to the past. This isn't let's return to traditional values and make things just like they were 100 years ago. Not realistic, not possible. 21st century problems require 21st century solutions. I try to not just identify the problem, but give a little bit of a hopeful and helpful prescription of some ways that we might actually find our way out of this dark winter, as you described. Because I do think America is worth fighting for. I think we've got the greatest country in the world. We've got some of the greatest resources, both in terms of natural capital and human. But we have to remember what got us there and why, and what values are associated with it, because those values are under attack, and it's a sad day.
And Michael, when is the book out?
October of this year.
Okay.
So we'll be out in a few months. These things always take longer, and believe it or not, supply chain issues have affected the book industry, the publishing industry, just like everything else. So what should have been out actually this month has unfortunately been delayed. Okay.
Well, we look forward to having you back when the book is out, Why America Matters, the Case for a New Exceptionalism. Thank you for an exceptional discussion. Really appreciate you joining us from Geneva. Great to have you with us here on Kitco News, Michael Wilkerson.
Thank you, Michelle. Great to be with you.
And thank you for watching Kitco News. I'm Michelle Makori. We'll see you next time.